When it comes to trading, what's the number one rule? What's the golden rule? What's the creme de la creme? What is the Mount Rushmore when it comes to trading psychology? Well, in my opinion, this rule is going to save you and stop you from losing bags upon bags upon bags upon bags upon bags. In my opinion, this should be in every economic journal, every investment strategy portfolio technique. This is trading 101, and you're going to be shocked by this rule, but we're going to talk about it in a sec. The most important rule in all of trading is cut your losses short and let your profits run. Okay, I'm going to redefine this or jazz this up for you. All right, only cut your losses short. What does that mean? Only risk 1%. Okay, and let your profits run. Maximize your profit potential. Okay, all right. So this seems very basic, very, very basic. But if you speak to the best traders in the world, and if you speak to the professional traders, hedge fund managers, to be honest, a lot of I can't speak today. A lot of hedge fund managers and asset managers, they don't even know what they're doing. They don't know what they're doing. All right. And you speak to them, talk to them about risk management, they'll look at you like, huh? Risk who? Manage what? Okay. A lot of people do not understand this. And as I say, 80-90% of the people using this app, this TradingView app, do not understand what this means. This is the golden rule of trading. Cut your losses short and let your profits run. All right. So we're going to dig deep and understand what this means in the next 2-3 minutes. Okay. So first things first, let's say you are a trader who has just come into the market, right? You're probably most likely a beginner trader. Maybe you've done a few funded challenges, you're looking to, get funded, or you're just looking to grow your own capital. Let's say you got 10, 20K you're playing with. All right. Now, what's going to stop your equity curve from looking like this? Let's say you start here at, let's say you start your portfolio with, let's say 100K, yeah? All right. What's going to stop you from doing this, which is trader number one? All right. Constant losses, not really sure what's going on. Or trader number two, whose equity curve looks more like this, a little bit stable, up and down, still at break even, no real money being made. All right. This is trader number two. Or now you've got trader number three who understands this phrase and understands how to manage their risk and manage their portfolio, and they have this trajectory. Okay, so what differentiates trader A from trader B from trader C? What differentiates trader number one from trader number two from trader number three? I believe, in my opinion and in my experience, and based on the people I teach and I coach, it's this rule here. Cut your profits not cut your profits short. That's what most people do. Most people cut their profits short, all right, and they let their losses run, which is ironic. That is what most people do. So let's talk about this in a bit more depth. We haven't got much time because I want to look at the chart. So let's see. So this is you, right? This is you right now. This is you. You are this trader right here. And you've obviously been playing around with the market for some time, all right? And you're not too sure what's going on, but you kind of see the market as this place where, it's quite unpredictable. It's very difficult to predict next moves. You're not quite sure how market structure works, risk management, supply and demand, liquidity works. You work with a lot of oscillators, indicators, but you're making it work based on your system. Now, you're over here. You have to ask yourself, are you this guy? Are you that guy? Or are you that guy? Basically, do you understand what this means? Now, let's put this in a bit more depth. Now, let's say this is the equity curve, or this is your expectancy based on your trading. These are your trading results. All right. You have a sample of 25 trades, and these are your trading results. Now, what did I say this rule means? Cut your losses short. Only risk 1%. If you lose a trade, you should only be risking 1%. All right. So, what does that even mean? That means if you have a long, this is your classic long trade. Yeah. In your long, obviously in your portfolio, let's say you had 100K. 100K is your equity. you should only be risking 1K per trade. Yeah. If you get to a nice 4x, you're going to make 4K. If you get to 2x, you're going to make 2K. If you only get to 1x, you're going to make 1K. All right. But you should only be risking 1K per trade. Now, what does that look like? Well, let's say you're this trader, your first trade was a loss. All right, that's fine. Your first trade was a loss over there. We can see your next trade was a loss. Okay, you lost another 1%. You lost, you lost, you lost, you lost. Guess what? You just lost 6 trades in a row. All right, but you've only lost 6%. No biggie. All right, your next trade, bang, 10%. Okay, now you're up 4. Even though you have lost 6 out of 7 trades, 6 out of your last 7 trades, so you have a hit rate of less than 20%. Okay, you have just got 4% plus in your account. So you're starting to look like this guy, aren't you? All right. So now, so your next trade was a loss, bang, -1. Then all of a sudden, you started to do what a lot of people do. They let their losses run. So instead of only losing 1% here, you lost 5%. Instead of losing 1% here, you lost another 5%. You have just squandered 10 trades in these 2 trades without realizing. Okay. And all of a sudden, you're still all right because your drawdown, you're only -7% down. Okay. You proceed to lose another few trades. You lost, and then bang, you get another nice winner, a nice 10x. You're only 1x down. Okay. You're only 1% down. So let's do the math. In the last 15 trades, you have only won 2 trades, but you're still only 1% down. Even though you've broken your risk management rule. You've broken a golden rule twice. All right. Now we continue. You lose, you lose, you lose. Then you get a nice winner. Then you lose. Then you get another nice winner. All right. Now, based off of this, you have taken about 21 trades. You have only won 1, 2, 3, 4 trades. Now, guess what? You are up 11x. You're up 10% in your account. Now, most asset managers, most firms, most banks, they will not guarantee you 10% per year. Okay, so look how proper risk management, understanding this golden rule, can really leverage and change your trading. Now you proceed to lose another trade, you lose another trade, then bang, you get a nice winner. You lose another trade, and guess what? You finish with 18% up. Okay, out of the last 25 trades, you've only won 1, 2, 3, 4. Okay, so you've won 4 out of 25 trades. You've got a hit rate of what? 4 out of 25, that is about 18%. You've got a hit rate of 18%. And guess what? You are about 18 grand up, risking 1K per trade. Now, let's imagine a world where this trader, you didn't have those 2 off trades. Let's imagine a world where you didn't risk 5% here and you didn't risk 5% here. You only risked 1%. That means you would have gained an extra 8% to this 18K. What's 18 plus 8? 18 plus 8, that's going to give you 26 grand. You've made 26 grand by only risking 1% out of 25 trades and only winning 4 trades. Okay, this is the importance of risk management, cutting your losses short, letting your profits run. All right, so this is how your equity curve starts to look like this. Okay, and not this, and not this. All right. So letting your profits run, what does that really mean? Well, what that means is de-risk your trade as soon as you can, move your stop loss to break even, and let the rest run. Obviously, we go into a lot more detail about this in the bootcamp, in the one-to-one lessons, in the crash course, etc. And if you want more information of that, I'm going to give you that information towards the end of the video. All right. We're running out of time. Let's take a look at some price action. This is what you came here for. This is just a little preamble so that we are learning the right habits as we go on. Okay. All right. So as of last video or last lesson, we talked about the idea that yes, Bitcoin. Actually, do you know what? We'll do a quick recap. So if we look at our last post, the last post was here. It's a 27-minute long video. We said we are on this massive range. We predicted a reaction from this bottom. Congrats if you longed it. We predicted this continuation here. Congrats if you longed it. Then we also said the next continuation, the likely place for it to happen is first of all at this 15-minute zone, this 15-minute block, following all of these other zones. Guess what happened? We got a nice move from the 15-minute block. So again, congratulations if you took that one. Some of my students did, smashed it. Let's talk about it and let's see how we could have got into it. So, Question is, where is that block? Where is that 15-minute zone? So if I get rid of this now, let's go on a 15-minute and just quickly find that zone, because I have deleted it from my chart because it's done. It's in the past. It's done. But if we were to find that zone again, that zone is right here. So our 15-minute zone was this block over here. It was that block over here. It came a little bit further down the block, so we can call that block 15-minute. This is our 15-minute demand zone. This is where we were predicting to get that nice continuation from, right? Because we said price action, we've broken structure here, forming another chain. We've broken structure here, forming another chain. We can easily come back here to carry on up, all right? And that's exactly what price did. So price gave us a nice reaction here for that move up. But the question is, yes, it tagged the zone, but how could I have entered that trade? Yes, I'm watching your videos, but how can I actually practice this and practice what you preach? So all you have to do is you have to evaluate this expansion leg on the way down and ask yourself, where do I get a flip in structure? So let's take a look. We get lower high, lower low, lower high, lower low. We get lower high, lower low, lower high. Then we get a high high, all right, over here, okay? Then we get a decent retracement, okay? And we head up. Okay, so now if you are looking to enter that trade, you would have probably entered off of this retracement. So you'd have probably looked along here and your stop loss all the way down here. So your risk reward wasn't the best, to be honest. But if you had balls of steel, all right, you would have waited to long over here, even though you saw the flip in structure, all right, which is a bit scary, to be honest. But it would have enhanced your risk to reward, knowing your stop loss is still all the way down here. All right, so this is basically, but we know we're not going to do best case scenario. We're going to do worst case scenario, which is here. So worst case scenario, you're in this trade, and this trade would have netted you about a 1.1x so far. So again, nothing special, nothing great. You know, you risked 1 grand, you made 1 grand back. And again, not great, but still a decent trade nonetheless. You might have said to yourself, okay, now I'm going to take my profit here, de-risk it. We're starting to get a little bit of a range here, a bit of indecision as we come towards this high. That's suggesting that, price is gearing up to do something special. Is it gearing up to break up? Is it gearing up to break down? You also have to say to yourself, okay, cool. If we take the fib extension from this high to this low, all right, have we gone past that golden region? Yes, we kind of have. We've gone past the level that usually we get a reaction from. We look to be accumulating or slash distributing at this top: 1 tap, 2 tap, 3 tap. Usually it's 3 taps on the way down. You're thinking about those things and you're saying, oh, why is price playing around here? Why? Okay. But regardless, congrats if you took that one, and if you haven't, don't knock yourself. You've only lost out on 1x. All right, so nothing crazy. But the question is, where's the next trade coming from? Well, if you remember a few weeks back, we talked about Donald Trump, didn't we? I said to you, I had a friend who called me and said, TJ, listen, every time we've got some news relating to Donald Trump, Bitcoin does a crazy, crazy move. We had the election over here. I think it was here, around here. We had this massive move up. Correct me if I'm wrong, but I think it's this low here. We had the election, we had this massive move up, and he said, listen, Donald Trump is getting into office on this exact date. I think it's on a Monday. And we said, we're going to watch and we're going to see what happens. We're not necessarily going to trade it, but we're just going to see, and anticipate what might happen. So now we're heading towards this zone. Is this the what is it called? Is this the momentum? We're going to need to blast up and break for another leg up in this range, or can we come back down? We have said, because we've SFP this low, the target for this low is this high. We have rotated to this high. We do have 2 obstacles in the way: a 45-minute supply zone, a 12-minute supply zone, before we get to the all-time highs again. All right, so now the question is, where is that next trade coming from? For me, it's very, very simple. Okay, and for those of you I teach, you should be able to see this chart just by looking at it, know where the next levels or the next setup is coming from. So just to tidy this up a bit, we got rid of this. We don't need this anymore. We don't really need this anymore. Okay, we don't need this just yet. All right, so what I'm looking out for now is I'm treating this as a range. Okay, and I'm going to make this a bit thicker so you can see it. So this is my range low, all right, and this is my range high. We're going to make that red. Okay, this is my range high and my range low. Now this range is in a very interesting position. The reason it's an interesting position is it's right below this 45-minute supply zone. So could it be we just get some juice from the 45-minute supply zone and then we drop down? Could that be the case? And if that is the case, why not plan for it? So that is trade number one. Trade number one is that we tag this supply zone, sweep this high, and drop down. Okay. Trade number two is that we come back down to SFP this low before we carry on up. All right. Simple trade number one, trade number two. Now, in my opinion, trade number one as well could also sweep this internal range that we've got going on, because what we can see here, let's make this range a different color, let's make it blue. We've got this internal range going on here where we can sweep this internal range, sweep the external range, and get the juice from that supply before we drop down. We've already swept this internal range, giving us a tiny move down with a flipping structure here, but can we get the monumental, the mammoth move on the way back down? All right, that's what we're watching out for. We are seeing that we're building some nice liquidity on the way on the downside. We are building this liquidity here. It's giving us that bearish bias that yes, we could actually drop down. And I kid you not, look how quickly we came up. If we start losing this level at 102,334, same way we came up quickly, we can lose this level, break structure, and come back down equally as quickly. But make sure you're watching this 4-hour zone before you do that. And make sure you're watching this entire zone for a potential reaction on the way up. Okay. All right. So those are my two longs and shorts. Now, in the case that, we do not reach this short, let's look at the shorts first. In the case we don't reach this zone, where else can we react from? Well, in that case, what I'm going to do is I am going to quickly check. I'm going to check to see if there's been any big high volume player involvement on the way up. Can we see? Yes, we can. Yes, we can indeed. Yes, we can. All right, so we can see here that we've got a 10-minute zone here. All right, we've got 10 minutes. Oh, look at that. This 10-minute zone is perfectly placed with this internal range. So I'm just going to call it a 10-minute zone there. All right, so I'm going to watch there for reaction or potential TP zone in the case we do come back down. So let me check quickly on the 5-minute. Do we have anything on the 5? Well, on the 5-minute, yes, we do as well. We've also got this 5-minute zone on this range low, on the actual range low. So I would like to see what happens when price comes to that level. All right, so I kind of like those two. Those are going to be my two zones. So what I do now is I flip to the highest structure. And I say to myself, well, even if we don't get a trade off of these zones, I want to see what price does when it comes down there. So I've set alert number one there. I'm going to set alert number two here. All right. So I want to see what price does when it comes to those zones. All right. And also, I also would like to see, in the case that price loses that zone, all right, in the case that price loses that zone, can I enter a long? So I'm going to wait to see if price comes back down. Do I get a retracement for a long there? That will be a play of mine as well. All right. So now that's kind of how I'm taking this range. I'm also looking at, a potential reaction from this 45-minute zone and this 12-minute zone, similar to what we had last time. And we're just waiting to see what Bitcoin does. Are we going to get our standard, standard W shape that we've been brewing up? Are we going to get bang, 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 bang? All right. Where you've kind of had, for you retail traders, a lot of you are looking at this as some sort of head and shoulders, maybe 1, 2, 3, where the right shoulder came with a bit of a dip, a bit of a lean. Maybe that's what you're looking at. All right. And if that is what you're looking at, that is fine. No matter how you twang it, no matter how you play these markets, as long as it makes sense for you and you understand what you're looking at, that is fine. All right. But what I will say as well is, hey, look at this nice liquidity trend line that we've built up. Okay. So are we going to get a break of this trend line anytime soon? And if we do, that's going to be a steep fall if we get a break from that trend line. All right. But you know what? I want to see this all-time high get run. I really do. Why? Because I want to let the altcoins do its thing. What Bitcoin does is it consolidates, it accumulates, and then altcoins make their moves. So I want to give altcoins a chance to redeem themselves. From the last bull cycle, we've still got some altcoins that we're waiting on. We're saying, come on, do your thing. All right. And that's what we're waiting for right now, as far as Bitcoin goes. So that's kind of what I'm looking out for. We've got this 4-hour zone we're also watching. We've got our deviation plays. We can extend this if we want, tidy this up a bit, extend this if we want, tidy this up a bit. Okay, I'm looking for a short here, also a short here. All right, but in the case, there is one more trade I want you to be aware of. All right, and this is a special, but it's a risky one. So this one deserves. This one deserves. Let's say you're driving. Let's say you're driving in the snow. This one deserves a nice hazard warning. All right, this trade is if we break out of this range bullishly, we do not tag this zone, we retrace before we tag this zone, come back into this range. I will be looking to enter a continuation long there, but I will be looking to position that just from the trade here, stop loss below that low, all the way to this high for a nice little 4x. Okay. But as far as my confirmation will go, it will look more like this. I will trace this leg on the way down, creating lower lows and lower highs. I'm going to wait for a flip. As soon as I get that flip, wait for the retracement and get a more refined entry in there. Okay. That's how I'm going to play that one. I'm going to take it off the screen for now because it's not necessary right now, right? That's way into the future. Okay. That's how I'm looking to play these charts, right? So if you found this useful, if you found this entertaining, if you found this just a little bit more insightful, feel free to hit the boost, hit the follow, hit me up on YouTube, hit me up on Discord. That's where to find me. All right, so that's today's analysis done. Now, what I do want to say as well is I want to give a big shout out to everyone who has joined recently. We've had quite an influx of new family members. All right. So big shout out to you guys. And I believe the reason for this is because I think one of the posts I posted last week was chosen by TradingView and put on their page or their editor's pick, something like that. So big shout out. Hopefully we get some more up there in the next few weeks/months. So yeah, big shout out to Mike Crypto, big shout out to Tony, shout out to Hash, shout out to Nick, shout out to Keyhan, shout out to Antonia, Freaky, Emmeline, shout out to Big Eagle. That is a cool animal. Shout out to Joseph. Shout out to all of you guys. Welcome to the family. Hope you're finding this information useful. Don't forget to hit Discord. Now, if you do want access to some of the things I offer, for example, if you're looking to join the bootcamp, we have a bootcamp in the last Sunday of each month. We have a bootcamp next Sunday. If you're looking to get involved, it's on Zoom and it goes on for 2 hours and a half, where I go through the fundamentals of trading. This is more for beginners, that should be a word. Beginners, right? We look at market structure, supply and demand, order flow, liquidity, range, Wyckoff, risk management. If you want to, secure your seat, hit me up. Just click this button on the website, tradejournal.co.uk, and you can send me a message straight on WhatsApp. All right. So that's my plug. If you do want access to that, if you think that's something that might be beneficial to you, definitely hit me up. Now, I also want to remind you guys, I haven't done this in a long time. Make sure you are journaling your trades. Make sure you are, writing down, why did I enter this trade? Why did this trade turn against me? Did I risk 1%? Did I over risk? Make sure you are tracking your efficiency as a trader, because that's the only way you're going to improve. All right. So it's been great. I'll see you guys tomorrow. And yeah, let's go from there. Let's have a profitable week.